All right, so the Fed met. The good news, they did what we thought they'd do. The bad news is their statements are basically moving the goalpost. So let's look into what that means for us this week and moving forward, and kind of maybe how that tweaks some of the messaging we've been giving here as of late. So first and foremost, rates, you can kind of see basically for the month of June, they've just basically moved sideways. We're having a good day today, so that's nice. Big rally, but you can see how this red line, this 25-day moving average, we've touched on it a couple of times and haven't been able to break above it. We shall see. Even if we do, there's not a lot of room for immediate improvement, because the 50-day moving average is that black line, and then the 100 and the 200-day moving average. So we got some headwinds facing us from a rate standpoint over the coming weeks. We'll need some good news over time to really break out of the little channel we're in right now. According to Investopedia, Mortgage News Daily, FreddieMac.com is not out at this moment, but it's similar in these styles where they're saying the 30-year fixed rate right now is somewhere around that 7% range. So again, Investopedia says 6.97. You got, Mortgage News Daily saying a little over 7%. So rates are still elevated. I would have anticipated them being lower, to be quite honest, because inflation is coming down. So what did the Fed do? They basically didn't do anything. They kind of just, which is fine. That's what we wanted. They didn't cut. They didn't raise. They just said, hey, we're going to wait and see, which is good because inflation data came out earlier this week. So the Fed funds rate is sitting at that 5 to 5.25. There are a couple of members that do 9 of them, which is a lot. They want 2 more rate hikes. So that's nuts to me. I just don't think they need it. They're changing the goalposts. They say they want to now achieve the 2% inflation sooner than later. We all want to get there eventually because inflation's bad, but if they go too far too fast, which is historically what they do, it will just take things to where there'll be major pain, right? So it's frustrating. Again, I'd like to see them do things a little differently, but here they are saying that they want to go 2 more hikes. There's even some crazies out there, and we'll see if they're crazy or not. I don't mean that the way it sounds, but I do. They say, no, they're going to cut rates by the end of the year. Well, why would they raise rates just to cut them that quick? So who knows? Time will tell, but these are some of the stats if you guys want to see what's going on. More stats, I won't focus on them, but basically the big part what we've been talking about as of late is that shelter cost. You can see right there in that third little section down here is 43% of the core reading of inflation, meaning of all inflation, when you strip out food and energy, because the Fed can't pump more oil and the Fed can't grow more food. So if you strip out all the stuff they can control, 43% of that number is based on shelter. And as we've been showing you guys, it is coming down. It's just takes a while. So here's the graph of inflation, right? So here's the core PCE. So they're saying now they want to see this closer to 2%, when right now it's sitting at 4%. So here's the problem with that number, guys. Take a look at this. So this is April and May of last year. These are the ones that are dropping off, right? The soonest to drop off as we move forward. 0.3, 0.3. And if you look at April's on the right side of the chart, we're at 0.38. So it's relatively flat, right? So as you replace these old numbers with the new number, it's going to be relatively the same. And to achieve their 2%, you're going to need the majority of the 12-month period. Over the next 12 months, you need inflation to be at like 0.01 to 1.6, technically, I think it is. So you got to, the only thing we've seen in recent 12, 14 months has been July of last year when it's 0.08. So that is a long time coming. And if they really want to achieve that before they stop hiking rates, it is going to cause some major pain in the economy. So guys, here's the part about what we're saying as far as rents. They're also looking at data that is lagging. You can see the real-time data from Zillow, Apartment List, Redfin. These are where rents are, right? The monthly leases and what's happened since 2022 all the way down to 2023. You guys can see that in some cases, rent is actually going down. But you can see about a year ago, a little over year and a half, rates were going up at 14, 15, 16, 18%, but now they're going down, or at least leveling to where it's a normal 2 to 4% range. So again, that's 43% of what we're talking about is shelter. Initial jobless claims. Here's the other part. Check out the 2022, so it's July of last year. So look from last year till now, and even at the end of 2022, these are initial jobless claims, people losing their job, filing for unemployment. You can see since basically September of last year, how more and more people every single month, almost month over month, have been applying for more jobs. People are losing their jobs. While that stinks for them, it's going to help slow down the economy, less spending when you don't have a job. This is also the CPI again for the shelter costs, as we just, so you can see how the shelter costs are coming down. So lastly, jobless claims, unemployment. Again, these are people that are reapplying or having it to where they're still unemployed, not the initial claim, but just continuing. So again, people are not finding jobs. This is going sideways. People are losing jobs. In terms of the overall, God bless Texas. We've always said that. If you're watching this and you are in Texas, it's a great place to be. You guys can see the activity. We're green. Green is good. We're up 66% as far as activity. Price increase, we've seen it. And we've seen some places like in Plano. I've one person offered like 50 grand over ask on a 380 home. So they went from 380 to 430 and they were the 5th highest. So it is crazy out there. Even one we just closed for was like a $2.3 million home. There were like 7 different offers. It's crazy out there. So our world is good. I'm sorry if you're in California or somewhere else. It's not so great, but that's the survey there. From a Texas local standpoint, guys, North Texas or just all the state of Texas, we're just to start following this more and more and more. If you guys haven't been paying attention, there is some movement to try to reduce property taxes. I've seen some statements saying they're trying to get rid of them altogether, which would be wild. I mean, sure, I'd love it. Don't get me wrong, not to pay property taxes on my home. That'd be wonderful. But some of them are just trying to put a cap at 5% versus 10%. That can obviously be a big savings. That would stimulate the economy. The argument is that sales tax is doing so well, and we got so much migration into Texas that we don't need the property taxes. They can make up the money elsewhere. I don't know that I love it, but it is what it is. When you look at it, property taxes from a state standpoint, the state taxes that has the largest impact on your personal finances, 47% of it's property taxes, which is wild. So I don't want my state to go broke. I want them to have money. They need money. We need to operate. We need to maintain a good, level of living. So we'll see how this goes, but we'll start following this a little more closely as things progress. And then lastly, for the duh moment of the week, the most powerful way to live longer. I read this article, I was like, duh, right? But it's to exercise. And it's wild that people don't exercise on a regular basis. I'll raise my hand and say that I'm not always the most consistent. Sometimes I will work out very hard for a couple months, and then I get burnt out, and then I take a month or 2 off. It's wild. I'm trying to be more consistent. It's just building habits. But exercise, guys. This is my public service announcement for the week. As always, please get social with us. Subscribe, share, all the fun stuff you're supposed to do. We appreciate you as always. And I hope I'm not as blurry on your screen as I am on mine, because this looks like a really poor quality, but I'm in a visiting office today. So there you have it. Hope you guys have a great week. Call us if you need us over the weekend. We'll be around.